How are we doing today, folks? Good. I'm kind of one of those, I'm in a position today where I'm just like, you know what? Instead of auditing, why don't we just take a nap? It's like a nap today, yeah. I could change the learning objectives to weekly naps on Wednesdays, you know? Yes. I say that and everybody's just like on board, but I know there's one of you out there that would just be on my evaluations and be like, I'm paying for him to teach me, and he was sleeping on Wednesdays, you know? I was like, I don't know. It would just go back, and Dr. Caden would yell at me, and you don't want Dr. Caden to yell at you. It's a very, very ugly scenario, and not that it's happened to me, multiple times, but yeah. So yeah, got to be very, very careful about that. Got to be very careful. We'll avoid Dr. Caden. So before we get started, something I meant to bring up Monday, but I completely forgot. So I did finalize the groups for the semester projects. It's posted on Brightspace under course materials under project group assignments. So here's the groups that I had come up with based on your preferences. If you had any questions about that, reach out to me. But this is what I basically had for the assignment for the groups, and I tried to accommodate everybody as much as possible to the groups that they had asked to be part of. The reason I bring this up is that now we have groups, we need topics. And so the next step for everybody is to figure out what topics your group wants to present on. There is a list of topics in the syllabus that I would like you to present on. For the most part, what am I doing here? Let's see. Yeah, I should. For the most part, I am restricted to this list of topics. I would accept some suggestions outside of this if you think that they're very, very directly relevant to this course. But they need to be something that expands our understanding of what we're already talking about, because we're not going to cover everything that I think is relevant to auditing in this course, which is the whole purpose of these presentations, to cover things that we haven't talked about in detail. So might take a look at that. It is first come, first serve. So if a group says that they want to do a discussion of system and organization control SOC reports, that's the only group that gets to do SOC reports. And let me tell you, SOC reports, that's valuable property right there. Everybody's rampaging to get to SOC. Actually, nobody wants to do SOC reports. I don't know why. They're so much fun. But yeah, I guilt usually one group a semester into doing it, because it's like saying SOC reports are great. But there are some that are definitely more demand than others. So please take a look at that. All right. Today we are doing our final chapter before we get to for our next exam. So this is the last chapter containing the exam. I technically do not usually ask a lot of questions on the exam over this chapter, maybe one or two questions traditionally. The only reason I include this is because this is a very heavy area of emphasis with respect to the CPA exam, and it's something you need to know of relevance to assurance and how the practices fit within auditing. So we are going to spend a day talking about it, and it's going to be part of the homework. Do I think that this is a very prominent area? No. And there's going to be some very specific things that I think you should learn. I'm going to point out a few tables that I think you should focus on for purposes of preparing for the exam. But this is going to be low level conceptually compared to a lot of the other stuff that we've covered. The stuff on internal controls, stuff on audit conclusion, audit reporting, that is very high conceptual stuff and stuff that you need to know really, really well for the next exam. This is stuff like, if you were just kind of like, I'll punt the 3 points, then you can take your nap right now and just be your best on the homework assignment. Because again, I don't hold this in high regard, but I think it's important enough that we're going to spend a day talking about it. So this has to do with assurance attestation, and then I'm going to toss in a very quick note about internal audit service. So remember this, we talked about this diagram, or this shape in our very first lecture, and I said auditing is a subset of two other broad topic areas, attest and assurance. And we're going to get into more detail about what those represents, but we need to understand this relationship. To be fair, the actual relationship looks something more like this, okay, with the different areas of types of engagements that could be performed. And we're not going to talk about all these engagement types. We're going to talk at a very basic level about what attestation and assurance services represent, particularly as they're depicted by the standards that are relevant in those areas. But let's go ahead and quickly define these as far as what we already know and how we actually represent these. Now, again, remember, auditing in itself is both an attest service and an assurance service, okay? It falls within both ovals. So the definitions that we have should apply to auditing. So let's just make sure that we are clear on this. Attest services occur when a practitioner is engaged to issue or does issue an examination, review, or agreed upon a report on a subject matter, procedures report on a subject matter, or an assertion about a subject matter that is the responsibility of another party. So first of all, can auditing be considered an examination, review, or agreed upon procedure? The answer is effectively yes. And auditing is basically an examination level analysis of a particular topic. It's a report on a subject matter or assertion about a subject matter, the subject matter being the financial statements and internal controls. It's responsibility of another party. We know that these financial statements and internal controls, their responsibility management. So this does meet our criteria for our attest services. Now, the thing to note here is that even though this loosely meets the parameters of auditing, we could expand this out to other things that are not contained just within the scope of auditing. We could do attest services over things other than financial statements. We could do them at levels that are different than examination levels. We could actually have them be responsibilities of other parties. So the attest, while auditing falls under the umbrella of attest services, is not fair to say that all attest services are audits, because that's not a correct statement. Now, assurance services are far more general. They're independent professional services that prove the quality of information that's context for decision makers. And generally speaking, we can say that's true for audits as well. So we can kind of see the association in the lineup here. Now, as far as what we're going to be talking about today, our audit engagements basically cover chapters 1 through 19, which we're going to cover every chapter except for 19. Chapter 19 is about liability. We're not going to cover that one simply because you do take multiple courses on accounting liability and professional liability and other classes. So I felt left that out. We're going to be talking today about chapters 21, parts 1 and 2, which are going to be attest engagements, which are statements on standards for attestation engagements, or SSAEs. Or other assurance engagements, which are going to be statements on standards for accounting and review services. So those are going to be our assurance engagements, which are SSARSs. All right, so let's go ahead and put this from the framework of something we're already familiar with, the parties and attestation engagement. And of course, I made a really bad joke again. I really need to delete these bad jokes from the slides. I feel so cheesy now. It's like when I was young, I got away with this. Now that I'm old, I just seem old and dottery. It's like, yeah, Dr. Barnes making a joke again. Yeah, that's kind of how I feel about this. This is just a lame joke. It's a lame joke, and my discussion about it is pretty lame too. All right, what are the parties? Well, we have the user, the responsible party, and the relationship with the CPA, which should look very familiar because this is our agency relationship that we've talked about already before. Remember, our whole foundation of auditing was predicated on the principal-agent relationship. And this is basically the same thing. We have the responsible party, the users, and the CPA, which kind of represent the same thing as the principal, the agent, and the auditor. Okay, so we haven't really changed the relationship. It's just changing the vernacular we use, because the responsible party could be groups other than management. It's anybody who's preparing the financial statement information. The users could be groups other than owners, people who are actually using the information for decision making. And you will notice something very interesting here. It says CPA. Now, I'm going to make sure I have a disclaimer on this. I will do my best to say accountant when I mean auditor in this situation. I will probably use the word auditor when it's not appropriate here, because we're not talking specifically about audit services in this particular lecture. We're talking about attest and assurance services, which are employed by an accountant. Okay, the accountant is the one who performs these services, a CPA, not an auditor. So if you hear me say the word auditor, then you can mark that off on your ledger. So Dr. Barnes did this once, twice. If I reach over 5, then I probably need to be a penalty needs to be enforced against me. I don't know. Maybe I need to be dunked in a water tank or something. I don't know. We'll figure it out if I actually reach 5. Okay, but I'm going to do my best to avoid those penalties today. So what are the types of attestation engagements we're concerned about? Well, this is going to be their first slide. So remember, I told you that for this lecture, I was going to point out tables that are very important for you to understand. This is the first of these, okay? So make a note of this for your review for the exam coming up next week. This is one slide you want to spend some time looking at. So these are the different types of engagements that can be performed in an attestation environment, all right? Now, I want to make sure that there's a delineation here. We're going to talk about both engagements and services, all right? And you'll see the note at the bottom, the type of engagement refers to the general level of service provided, while attest services refer to the specific attest procedures performed. An example of this would be an examination, which you can see that's in a type of engagement listed up here, of pro forma financial statements. And pro forma financial statements will be the services. We're going to list out the services here in just a second. There are 6 of them, but we want to define what we mean by engagement first of all. Now, engagements are defined by the level of assurance provided, the attestation risks that can actually be allowed, the type of report that's generated, and the distribution of the report. And these generally follow different characteristics, okay? Examination is the easiest. And the reason why is we're already fairly familiar with the idea of an examination because it's effectively an audit. In fact, you might want to write that down. When you see examination, say effectively an audit. All right. The level of assurance is high. What do we say the highest level of assurance is for in an audit environment? Reasonable assurance. So an examination provides reasonable assurance. It's the highest level of assurance. Attestation risk is low. The reason we call it attestation risk is because we're in an attestation environment, not an audit environment, but it's a similar concept to audit risk. We can't allow a lot of risk associated with our work, so we're going to keep that as low. So it's the same thing as saying audit risk is low, attestation risk is low. The type of report we render is an opinion, which is the same that we issue in an audit. And report distribution, it's going to be general or limited depending on who the audience is that we're issuing the report for. That will be specified in the engagement, who actually gets the report distributed to. And now a review is less in scope than an examination, okay? It provides less detail, provides less assurance, and it's going to be appropriately adjusted. So first of all, the level of assurance is moderate, okay? Generally speaking, when we talk about assurance, we provide negative assurance in a review. Negative assurance basically says that we're not going to say that the financial statements are free from misstatement, but we're just going to say we didn't see anything that was problematic. And we'll take a look at that, an example here in just a little bit. An example of kind of that. Attestation risk is moderate. So again, because it's less detailed in a procedure, the risk that we're subject to as accountants is going to be moderate. We also are going to talk about the type report negative assurance. Negative assurance is what's generated in the report. The opinion type that's generated report is not actually an opinion. It's called a conclusion. Okay, a review issues a conclusion. Now you may be saying, what's the difference between the word opinion and conclusion? And I'm going to say, well, it's the spelling. That's the difference between the word. But from an accounting perspective, when we think of opinion being a high level result. We think in conclusion, that's a medium level result. So opinion basically registered as being something like reasonable assurance level. Conclusion is going to be negative assurance level. That's basically the difference there from an accounting perspective. Now, if you want to go out in the real world and use the words in opinion and conclusion interchangeably, no judgment here. You guys can go do that. But for this classroom, you need to understand there is a fundamental difference between opinion and conclusion. And the report distribution is just as before. It depends on the audience, who the engagement's being performed for, but it could be general limited. Now, agreed upon procedures. Now, technically speaking, when we talk about agreed upon procedures are just basically any type of procedure that does not reach the level of an examination or review, okay? It says that the level of assurance is variable and the attestation risk is variable. I'm going to throw this out at you. In most of our scenarios that we're going to be talking about the agreed upon procedures, our level of assurance will be low, okay? If not just non-existent. We may not have any assurance provided whatsoever with the agreed upon procedures. It's very rare that we see agreed upon procedures reaching the level of moderate assurance or high assurance. Even though it says variable is going to be subjective in the fact that we're going to be talking about a relatively low level of assurance. That being said, attestation risk for agreed upon procedures is generally high. We do not provide very much context whatsoever for the results that we reach. We don't even issue an opinion in the situation. We don't issue a result. We just basically provide a summary of findings. The report is just saying, here's what we found as a result. You do with these as you what? You draw your own conclusions in this particular situation, okay? The people who use that report. And the report distribution is always going to be limited to specified parties. You will never have an agreed upon procedure where it's going to be a general distribution to where anybody can access it. It's always going to be limited, restricted in distribution. So yeah. Those are not particularly difficult to understand once you've taken a quick look at them. They kind of move on scale and scope. So basically you think examination is going to be our audit level procedure. Review is something in the middle. Agreed upon procedures, that's very, very minimal procedures. So those are the types of engagements we're going to talk about. Now, I said there were two categories. There's engagements and there's going to be services. So let's talk about the different types of services that can be rendered. All right. First of these is going to be agreed upon procedures. Now, I know what you're thinking, okay? You're saying, Dr. Barnes, you just said this is an engagement type. How is it also a service type? It's both, okay? It's both, okay? I know that doesn't make any sense. Go talk to the ACCT and tell them that it doesn't make any sense, because I've already sent them many mails, or many letters, and many emails, and they still haven't responded to me. They just think I'm a crazy old man by this time. So yeah, agreed upon procedures. Okay, what is agreed upon procedure? A CPA is engaged to report on specific agreed upon procedures. Don't you hate it when the definition is actually in the term? Okay, this is from the book, by the way. I didn't make this up. All right. Basically, what we're saying is we say the accountant agrees to perform specific steps. They perform certain tasks that are defined according to the scope of the engagement. All right. And these are usually less in scope than what we would think about a traditional review or an examination procedure. Very minimal in context. That being said, we talked about this as the way that I define the agreed upon procedures. I say this is effectively a customized audit. Okay, a customized audit saying we're going to look at a very specific area in a lot less scrutiny than we would in a normal audit. That being said, in attesting mutation games we can perform, it can be at agreed upon procedures, which makes sense. It's predictable that agreed upon procedures would be agreed upon procedures. Now, you may be asking, if we were trying to list out the engagement type and the service, do we have to say agreed upon procedures for agreed upon procedures? The answer is no, just say agreed upon procedures. The rest of these do actually vary, though. Okay, so the second type we're going to talk about is prospective financial statements. Prospective financial statements are forward-looking financial statements that are not based on historical cost. Now, the question always comes up, are we talking about the creation of prospective financial statements or some sort of analysis of the prospective financial statements? The answer is, when we talk about it in this context, this is us performing analysis over the financial statements. However, we're going to look at moving forward, we're going to talk about also the possibility of creating these financial statements for a client, but that's a little bit later on in today's lecture. For the most part, this is encompassing analysis. When we perform analysis, it can be either at the examination level or the agreed upon procedure level. Now you'll notice I have it in parentheses, as well as preparation and compilation. We're going to see those terms here in just a little bit. They do not fall under the attestation umbrella. They fall under the assurance umbrella, but I wanted to throw those in there because these can actually be something we're going to talk about a little bit later. These actually deal with analysis of this information. This actually deals with the creation information. So have you been engaged to analyze the prospective financial statements that somebody else has put together? If the answer is yes, you're performing an attestation engagement. Have you been engaged to create prospective financial statements for a client? If the answer is yes to that one, or you're preparing or compiling them for them, then that's going to be an assurance procedure. But there's a little bit of a delineation there. Next, we have pro forma financial statements. Does everybody remember pro forma from chapter 17, pro forma financial statements? So what are pro forma financial statements? These are projected financial statements based on assumptions about future options. These are also not based on historical cost. When did we talk about using pro forma financial statements in chapter 17? That was during subsequent events. If we thought that the subsequent event, the type 2 subsequent event, was so severe that we had to actually change our assumptions about future operations, that's when we would use pro forma financial statements. But in this scenario, the same situation comes up. Are we talking about analysis or creation of these financial statements? If we're talking about analysis, then that's where we'd be in an attestation service. That would include examination or review, depending on the scope. We could actually talk about preparation and compilation as well, but those would go into an assurance service. These would be more of an assurance service in that regard. All right. Our fourth one is called compliance. Compliance is basically verification of client's compliance with the laws and regulations. So when you see the term compliance in this course, you should automatically think 3 words: laws and regulations. Okay. Compliance always refers to making sure that we're following the rules within a particular area. All right. So what type of engagement can we perform over an attestation engagement can we perform over compliance? Answer is an examination or agreed upon procedures. Okay. Next is going to be something you're probably familiar with, but you didn't know that there was actually some sort of procedures performed over them. This is going to be management's discussion and analysis. Is everybody familiar with MD&A sections in the 10K? I've seen those before. I know that you probably looked at a 10K and you probably heard the term MD&A. Even if you've not necessarily analyzed it, you know it's part of a 10K. So management discussion analysis is a subjective analysis of the 10K results. Okay. We, as accountants who perform attestation services, are going to verify the comments made by management relating to the financial statements. So this could be considered part of an audit if it was part of the holistic financial statements. We can also conclude this as a financial statement if we just want to verify this information, this piecemeal point of information for the client. So types of engagements we perform here are going to be examination and review. All right. The last type of service that we can perform in this area, something we've also seen before, is service organizations, okay? Service organizations, and specifically, this is testing of controls and operations in place at organizations that provide services to clients. Remember back in chapter 6, we talked about service organization or system organization control reports. And my argument was there is that if we've got a company that provides services to our client, we have to understand what their controls infrastructure looks like because they are part of the client's control system. So optimally, we would love to go over there as auditors and test all of their controls as well. But that is not a practical approach. One, because we don't have that kind of time, but two, because they aren't our client, so we don't have the authority to go and test in it. So we rely on something called SOC reports to replace those. Remember we talked about the SOC 1 report? I said the SOC 1 report was all you needed to remember for this particular course. SOC 1 could be a SOC 1 type 1 or SOC 1 type 2. Now, those basically say that we're going to get a pre-made report by another auditor that's at that client, and they're going to actually provide the information for us. This is saying we could actually be the auditor in the place of that service organization that's preparing these reports, okay? We can test controls, we can test the operating effectiveness of those controls in place in those organizations that provide services to clients. This is the other half of that. These are the people who actually prepare the reports. It's considered to be an attestation service, okay? So what type of engagement can we perform? This is examination level only, which makes sense if you think about where we're going to use these types of reports. Service organization control reports are going to be used almost exclusively, at least the SOC 1 reports, I should say. SOC 1 reports are going to be used almost exclusively for audits. So they probably need to have high levels of assurance associated with those. Okay, so examination is going to be that. Now, I know there was a lot of information to associate with that. You probably took detailed notes on that, but you're saying there's no way I'll remember this. I do have good news for you, okay? This is all summarized in a table listed right here. You can go ahead and thank the good folks at Becker because they're the ones who summarized this for me so that I could actually present this to you because this is not in the book. So write a nice little email says, thank you, Becker. Dr. Barnes told me to send thank you. I don't remember about what, but thank you. And they'll be very, very pleased that you actually sent them an email. Either that or it'll just go in the spam folder. One of the two. Okay. All right. So that kind of summarizes what we're going to be talking about with respect to attestation services. But let's go ahead and go into a little bit more depth about some things that we need to be aware of. Primarily, we need to understand how it's similar to auditing. And by now, you should probably pick up that there are some definite similarities, as auditing is effectively just a specialized form of attestation. But let's go into a little bit more detail. The first and most obvious similarity is going to be an examination provides a level of assurance comparable to an audit. So when I talk about examination level of assurance, that's reasonable assurance right there, the highest level of assurance we can provide. Examination engagements are very high levels of assurance. So anything that can be done at the examination level, we can achieve a high level of assurance. Also, attestation standards are comparable to generally accepted auditing standards, which we haven't really talked about in this course. I don't think that it's a really important concept to go into, but generally accepted auditing standards generally have three categories: general, fieldwork, and reporting. And this attestation standards have those same three categories that talk about it. They follow very, very closely. Remember, or with respect to general accepted auditing standards, when we use that term, it talks about the general principles that the auditor uses in conduct of an audit or audit engagement. And then the attestation risk model is virtually identical to the audit risk model. Okay, so AR equals IR times CR times DR, which is something we can conclude. Now, this is a little bit subjective for a couple of reasons. The first of these, the simple reason, is that a lot of times we're not going to consider control risk in attestation engagements. So this could actually just be defaulted at high, and we would only consider IR and DR. But one of the more interesting ones is, remember we talked about audit risk, and what did I say audit risk almost always is? It's almost always low or very low, okay? Audit risk is effectively a constant. So that was one of the things that characterized the audit risk model when we studied it back in chapter 4. Is attestation risk always going to be a constant? Well, based on the slide that we had a few slides ago, no, it's not, because I'm scrolling back. See, attestation risk can actually be low, moderate, or we could even say it's usually high for agreed upon procedures, which creates a bit of a pickle right here. Because if we talked about attestation risk model, this AR, which is now attestation risk, it could actually be across any area of the spectrum. Well, so what does that mean? That implies that we have to actually consider more to the relationship than just IR-CR to actually determine what DR is. Before, all we had to know was risk and material misstatement to establish detection risk. If we're talking about this from an attestation risk perspective, we also have to now consider what is the engagement type that's actually going to dictate the nature of our detection risk. Think about this logically. If attestation risk is high, we're saying that we can tolerate a lot of risk in our attestation engagement. Does that mean that, what does that mean about the amount of work that you have to do relative to an audit? It's going to be substantially less, okay? Substantially less work, which makes sense because auditors have to do a lot of work because auditors have to provide reasonable assurance. Somebody who's doing an agreed upon procedure, they have to do a lot less work because they're only providing very minimal levels of assurance, okay? So consistency is there and kind of creates an interesting aspect to that model. All right, so attestation report. Similar to financial statements, audit attestation engagement require the CPA to prepare a report of their findings. They very dramatically detailed, but they have a similar set of elements. So the good news is that I do not think that this topic is important enough that I'm going to make you look at every single type of report out there for attestation engagements. Trust me when I say there are a lot of them. And for those of you planning on sitting for the CPA, good luck. There are some things that we can actually take away that are going to be very, very consistent. Okay. So first of all, they always have a title and a heading. They always have an introductory paragraph. They all will contain a scope paragraph, which remember that scope paragraph details the work that's performed by the accountant. Okay. And then we have a conclusion paragraph. Now I do want to, our conclusion section. I do want to clarify the conclusion means different things in different reports. As we talk about examination, the conclusion is always called an opinion. In a review report, it's always called the word conclusion. And then agreed upon procedures, we don't issue an opinion or conclusion. We just render a summary of findings, which is the end result. So the end result is going to be different depending on the engagement, but they all kind of have that end result common between them. All right. So we're about halfway through class, which means we're about halfway through the topic. So we're going to move on and we're going to start talking about assurance engagements. Now, assurance engagements are very, very broad by design. In fact, if you think about, has anybody had an internship at a public accounting firm yet? An auditing internship. I guess I should say auditing internship, or even if you didn't have an internship, did they call it the auditing segment or the auditing unit, or did they call it the audit and assurance or something about assurance? Generally speaking, that when firms like public accounting firms, when they talk about the audit function within their organization, they refer to it more broadly as assurance, simply because you can provide services that are not just financial or statement audits or internal control audits. So assurance is generally the terms used in most public companies. So it's very, very broad. It's going to be covering a lot of scope. We're going to talk about it at a very basic level. There's going to be some very important concepts we're going to talk about, but I will say the detail that we're going to go into is not going to be a whole lot. We're going to try to keep it fairly simple, if not simpler. All right. So Messier, Glover, and Pratt, that's our book, MGP, whenever you see MGP, I'm referring to the book. And Becker identifies 3 categories of assurance services under SSARS. And technically speaking, I think we could probably compartmentalize all of the services within these 3 categories, but it can be challenging because they're so dynamic and variety. But we're going to kind of keep it straightforward. The first one is called a preparation engagement. Remember, we talked about preparation earlier. I said the creation of financial statements. We talked about scenarios. This would be the first of those scenarios where we are engaged to create financial statements for a client. All right. So by definition, preparing the client's financial statements in accordance with a specified financial reporting framework. Now, how does this come up very often? The answer is if you've got a company that is operated almost exclusively on a cash basis, and they're trying to expand their operations and trying to get a bank loan, and the bank loan says, we need you to prepare financial statements on generally accepted accounting principles basis. And nobody in the company knows how to do that because they've always operated according to cash. They've got their QuickBooks program. They've got their invoice programs that send out the invoices. They've been very, very happy with that. They've never had any reason to do anything different. But the bank says, yep, you've got to report according to GAAP if you want this sizable bank loan that you're trying to get to receive. So they might hire an accountant to come in and perform this particular engagement and say, we're going to prepare the financial statements for you based on GAAP. This could also be other reporting frameworks, but this is usually the most frequent when this occurs, is that when somebody who reports on a basis that's a more simple basis and has to actually perform on accrual basis, generally accepted accounting principles. Okay. Now, some interesting features. These are some notes that we're going to be very, very so knowing a preparation, understanding where preparation occurs is very easy, but we do need to actually specify some items. First of all, This is probably one of the few assurance engagements of all types of assurance engagements where independence on the part of the accountant is not required. What do we say for auditors? Is independence required to be an auditor? To perform an audit for an organization, do you have to be independent? Answer is absolutely yes, 100% of the time. Okay. That if you perform an audit, but you're not independent, you have to disclaim an opinion. That's kind of the requirement there. So independence is not required under preparation guidelines. Also, there is no report and no opinion provided. All right. Now, I did put something in notes here. You'll notice I say no report, attest, or no assurance provided. This is something that comes up in the book if you're reading. It might come up in some studying that you do in the future. With respect to the assurance services, they considered the reporting function to be an attestation function. So if you issue a report, that's considered to be an attestation. And then the opinion itself is providing assurance. All right. So if you don't issue an opinion, you provide no assurance. In this situation, preparations are easy. You don't issue a report, you don't issue an opinion. Neither of those are applicable. Okay. So preparations are basically put together the information for somebody based on the specified reporting framework. Next to these is going to be a little bit confusing because you're probably going to say this sure sounds like the same thing, and it sure sounds like it. A compilation. So what's a compilation? Compilation is presenting a client's financial statements based on the representations of management. And that sure sounds like a preparation, right? It is slightly different, okay? It is slightly different. When we do a preparation, we follow whatever the guidelines or the principles are of the reporting framework that we note. When we do a compilation, we still follow reporting guidelines, but we also use anything that's subjective in the preparation is based on whatever management tells us to do, okay? So it says, all right, we need to create an allowance for uncollectible accounts. What is the procedure that you use? And management tells us we're going to use 2% of sales annually to calculate bad debt expense, and that will be aggregated into accounts or allowance for uncollectible accounts. We generally don't have to make these kind of judgments for preparations, but we do have to have those judgments for compilations. And so we require management to make those judgments for us. That's kind of the deal. Now, compilation is interesting in the fact that independence is not required. Independence is not required, but you'll notice there's a star next to it, which a star never means a good thing, okay? Usually a star means small print in the slides, and of course it does. Can anybody read that small print from where you're sitting? Okay, well, that's good. Your eyesight's better than mine. Let's see. I'm curious, can I even read this if I do? I can actually read it. How about that? Though an explanatory paragraph must be included in the report stating the CPA is not independent. So if we perform a compilation as a CPA and we are not independent of the client, that is fine. But in our report, we have to disclose the fact that we were not independent in the performance of this service. So that's kind of an interesting little wrinkle. You don't have to be independent, but you do have to disclose if you're not independent, if you perform a compilation, all right? And then there's a report issued, but no independence provided. So there's an attest function, but there's no assurance functions. No opinion is rendered, but a report is issued. The final engagement that we're going to be talking about from an assurance perspective is going to be called a review. And I know what you're saying is review. We've already talked about review, Dr. Barnes, and this is very similar to a review that we talked about for SSAEs on attestation engagements. The difference being is when we talked about reviews for attestation engagements, generally speaking, those reviews could be over anything, okay? It could be over a wide variety of areas. Reviews in this area are almost exclusively focused on financial statement reviews, okay? Whether these be annual financial statement reviews or interim reviews, these could actually be subject to a number of different guidelines. So, a review expresses negative or limited assurance that a client's financial statements are in conformity with a specified reporting framework. So again, this sounds a lot like an audit, but it is less in scope than an audit, simply because it is a review. It doesn't have the same level of detail. Independence is required in a review, and because apparently I messed up my animation, a report and opinion are both provided. Again, the opinion that's rendered in a review is called a conclusion. That is consistent with SSAEs. But just to restate, what is the difference between an SSAE review and an SSARS review? SSAE attestation reviews are generally going to be over anything other than financial statements, or at least annual financial statements. And then assurance reviews, SSARS reviews, are specific to financial statements, though they can vary in what type of financial statements they look at. Almost frequently, very frequently, they usually are going to be over interim financial statements, which are non-annual financial statements. Usually when we talk about annual financial statements, those are going to be subject to PCAOB or ASB guidelines. We talk about interim financial statements. Those are going to be usually subject to SSARS guidelines. Now, there's a caveat to that, which we're going to get to here in just a second, but I'll talk about that here in just a moment when we get to that point. All right. So as before, we've got a table here for you. This is a table. Yeah, I think this is also another Becker table that I pulled and pasted in here. So don't tell Becker, or at least if you do tell Becker, yeah, don't use my name. Okay. Yeah, but I didn't necessarily get their permission for this, and I've now admitted that on tape. So now YouTube is going to be searching through the algorithm. I'm rambling. Sorry, guys. All right. So an interesting thing about this particular point is that SSARSs do not apply to reviews of interim financial statements whose non-issuers of annual financial statements are audited. Okay. So this is an interesting point. When we talk about SSARS reviews, these are going to be applicable if there is not already a financial statement audit, annual financial statement audit. If there is an annual financial statement audit, and then there's subsequently our interim financial statement audits, then we're going to use the standards by which the annual financial statement audits are applicable. So if it's a public company that has an annual financial statement audit under PCAOB guidelines, they will actually have the interim reviews performed under PCAOB guidelines. If it's a private company that has an annual financial statement audit under ASB guidelines or statements on auditing standards, which are the auditing standards for ASB guidelines, then we're going to perform the interim audits under SAS or ASB guidelines. So I realized that I just opened a whole new world of confusion. So let me go ahead and break this down, okay? If it's a review of anything other than financial statements, it's generally going to be statements on standards for attestation engagements or attestation engagement standards, okay? If it's a review of financial statements that are not going to be subject to PCAOB or ASB guidelines, that's generally going to be statements on standards for accounting review services or assurance standards. If we have an annual financial statement audit for under PCAOB guidelines, the interim financial statement audits will also be under PCAOB guidelines. And then finally, if we have an annual financial statement audit under ASB guidelines or statements on auditing standards, the interim financial statement audit will also be under ASB guidelines or statements on auditing standards. Is everybody thoroughly confused now? The good news is that I'm not probably going to ask you that question on the exam. I just had to clarify for that point, okay? I do think this stuff up here is really important, though, so make sure you spend some time on that. I can't promise that the CPA exam won't ask those questions, but the good news is you have some time before you have to worry about that. All right, real quick, let's just reiterate our assurance levels that we've talked about before, okay? Reasonable assurance. Reasonable assurance is going to be our audit level of assurance. You can also toss an examination up here. Examination is going to be at this high end. Any review that we perform is going to be right in the middle. It's going to be limited assurance, and then preparation, compilation, and agreed upon procedures in general are going to be down here. I'd actually say agreed upon procedures are probably somewhere around here, but this is just the assurance levels for the assurance procedures. Now, while preparation and compilation are similar to audits in that they are all assurance services, that's effectively where the similarity ends. However, as level of assurance increases the assurance service provided, the more closely the service resembles an audit. So let's take a look at reviews and audits, okay? Similarities, there's an engagement letter, there's an understanding of the client, they perform analytical procedures and other assurance procedures, which are going to be consistent with a review. Usually these other assurance procedures are going to be limited to inquiries, so inquiries and analytical procedures. Evaluation of results, communication results, and management representation letter. So those are all pretty consistent between the two different engagement types. What's different is fascinating, okay? Communication with predecessors is not required in a review. There is no assessment of fraud risk. We don't have to consider whether fraud takes place. A big one, in a review, there is no tests of controls. I know you're shocked and stunned right now. Everybody is just weirdly, it's like, no test of controls. Is that even possible, Dr. Barnes? It is, but only in a review, okay? Or something less than a review. In an audit, we still have to test controls, or at least understand the controls. And we don't perform audit procedures, other than the two procedures that we talked about before, analytical procedures and inquiry are you going to be listed there. The way Becker actually sets this up is they actually have an acronym for it. And I'm not big on the Becker acronym. Some of them are really good. Some of them are a waste of time, but I like this one just because it's funny. It's called ULI or CPA. Okay. It actually says what are the things that are consistent between a review and audit. That's basically the ones that are listed here. You don't need to memorize that. I'm not going to probably test you on this differences. And if I do, it's going to be a very simple difference. But if you just want to know what's coming from you, if you're not already familiar with Becker, it's a world of acronyms. It's a world of acronyms, and they're going to throw a whole lot at you, and this is one of them. All right, so get ready. All right, To wrap up, let's go ahead and talk very briefly about let's actually go and talk about review reports here because there's a couple things I need to talk about. So review reports are qualitatively similar to standard unmodified audit reports, which includes the CPA responsibilities for new additional information, but there are some important differences. They refer exclusively to analytical procedures and inquiries. They do use the term that it's substantially less in scope than an audit. So they do delineate from the fact that it's not an audit, that it provides a level of assurance that's far less than that. It specifies the review is conducted in accordance with SSARS, or Statements on Standards for Accounting Review Services, and it expresses negative assurance. They use the term, we are not aware of any material modifications. Now, I do want to throw these next two slides up because these are going to be consistent. I will tell you right now, I'm not going to test you on these next two slides because the lack of consistency is really problematic, and I'll explain why here in just a second. But this is basically what the book says. And then I actually have done some independent research, mostly that independent research being Becker, and there's been some inconsistency in what the book says and what Becker says. So there are two conditions that lead to a modification of a compilation review report. The first of these is a departure from GAAP, which is based on 722 here, which talks about a modified review report for a known departure from GAAP. Okay. So basically, if we do identify a departure from GAAP as part of the review, we can modify our report to actually reflect that departure from GAAP. The second of these is going to be a going concern. Okay. Again, going concern saying that we have worries that they may not be in business a year from now. We would include an additional paragraph in our report to actually reflect the going concern issue. Now, the reason I mention these is these are listed in the book. The book says that this does not change the conclusion that's rendered in a review report. Okay. So you don't actually have different opinion types or different conclusion types in a review report. I was holding on to this pretty tightly for the past few years. And I was just kind of like saying, yeah, okay, that makes sense. No different review types. And then I was kind of absolutely listening to the old audit instructor. His name is Tim Garrity, which, by the way, it is a tragedy that you will never get to experience Tim Garrity because that guy was a buffoon. Okay. I mean that in a good way. He was kind of a crazy old man type of guy, but he had a really good storytelling. He's no longer involved in the Becker review, but they actually have some pretty interesting characters there. But I'm listening to him and he starts talking about this and it said, whoa, wait a minute, something came up. And what they said is they said that you can actually, oh gosh, darn it. Oh, I was going to show you Becker because it actually shows, okay, never mind. I didn't think that was going to log me out. All right, what I was going to show you is in the Becker materials, it actually talks about that you can actually issue a qualified report for a review analysis for either of these two scenarios. So it can actually lead to a qualified conclusion. And again, that's one of the reasons why I don't test on it because it's inconsistent with what the book is saying. But just for kind of future reference, if you're curious about whether these can actually change the type of conclusion rendered, the answer is effectively yes. You can actually have a modified opinion in that situation. All right. Last thing I want to talk about internal auditing. Okay, we've alluded to internal auditing, and we're not going to be experts in internal auditing about this. I will say there's a likelihood that many of you will go off into the world and consider a possibility of internal auditing. It is a pretty robust area. It's a lot more dynamic than financial statement external auditing, simply because there's a lot more area of responsibilities. So if you're sitting in this class and saying, I really enjoy the concept of auditing. I think I'd do well with it, but I don't know if I could do the same thing over and over again, which if that's the case, why are you in accounting? It's just weird. But yeah, if you're just kind of like, I'd like to do a wide variety of responsibilities, this may be an area that you would look into. So there's actually a lot of companies that recruit for internal audit functions here at Truman State. So it's an independent objective assurance and consulting activity designed to add value and improve an organization's operations. I do want to make the note of this here. If you are an internal auditor, you are an employee of the organization that you work for, okay? This is different from an external auditor. An external auditor is a hired consultant outside of the company that performs services for that organization. So if we think about a company like Amazon, external auditor would be like one of the big four accounting firms. I'm not sure who does the Amazon audit, but one of the big four accounting firms likely does it. So we say PwC is the external auditor for Amazon. Somebody can check that and make sure that I'm right on that. I'm only about 25% certain on that for obvious reasons. All right, but one of the big four does Amazon's audit. Okay, they're external group, but Amazon has internal auditors too. These are employees hired by Amazon. They are Amazon employees to provide additional assurance. They do this year round. They don't just do the audit of the financial statements at one point in time, or even the interim and financial statements. They approve assurance and quality services year round for the organization. Now, there's actually an organization that supports internal auditor. It's the IIA, the Institute of Internal Auditors. We've actually heard this term before, this organization before, because IIA is actually the one that actually spurs our definition for segregation of duties. So they are the ones who develop the idea that the custody, authorization, and recording have to actually be separate functions in order to be valid functions within an entity. So the IIA is responsible for that. They've got 4 principles: integrity, objectivity, confidentiality, and competency, which again, that's just for reference. I'm not going to test you on the principles of the IIA because it's a very minimal thing and doesn't affect your ability to do an audit, but it's good to know that those principles are guiding this. So what are some things that the auditors can do internally, or internal auditors will do? Well, they're obviously going to be responsible for controls, evaluating the risks the organization is subject to and making sure proper controls are in place. To the same degree, they're actually going to test those controls the same way an external auditor would to make sure they're operating effectively. So that's going to be an additional level of oversight. They will review compliance of the organization. When we think about compliance, remember, we're thinking about laws and regulations that the organization is subject to, making sure that they have the proper protocols in place for the industry that they're operating within. They're going to perform financial auditing tasks, making sure that reporting, that the annual reporting and even the quarterly reporting, the interim reporting, is correct and consistent with the guidelines of the industry they're operating within and the reporting principles. Usually, we talk about specified reporting framework. We tend to default to GAAP, but some organizations may have different reporting frameworks. And then one that's a kind of fascinating one, we have operational auditing. This is something that we have not really talked about in this course, but there is possibility for auditing of the operations of organizations rather than just the financial statements and controls. So you think about what we think about with operational accounting, that would be kind of Dr. Otero's area of knowledge. We talk about managerial and cost accounting and making sure that the operations are consistent with expectations. Like standard cost, for example, would be an area that they'd be very focused on. Are they meeting their expectations within that area? If so, what are the consistency issues and whatnot? So this would be more about in that realm and having people who actually follow up to make sure that there's consistency within the areas of cost and managerial accounting. Now, recall that we talked about interactions between internal and external auditors, and the best thing about internal auditors from an external auditor perspective is the external auditors can rely on the work of the internal auditors under certain conditions, okay? So if it aligns with the work that the external auditor is doing, then we can gain assurance from that, which more assurance for us as external auditors means less work for us as external auditors. However, to rely on the work of the internal auditors, the external auditor has to evaluate 3 conditions, 3 criteria. The objectivity of the internal auditor, they have to make sure that they are free from managerial influence. The competence of the internal auditor, we have to make sure they know what they're doing. And the application of a systematic and disciplined approach. Does what they're doing make intuitive sense for the process that they're actually performing tasks over? If the answer to all 3 of those questions is yes, then the good news is that we can use some of that work to kind of defer the work that we would normally perform and basically render an opinion based on the work of that internal auditor. So great things about internal auditors, they can help out the external auditors. I'm sure there's probably a lot more great things about it, but I'm talking from a former external auditor perspective. I do think that there's a lot of value in what they provide to the organization and to the other auditors as well. And that does it. So we are done with our chapters. We have our homework due on Friday. The homework is over chapter 17, 18, and 21. So we do that. And then we've got our exam review next Monday. Please make sure that you start thinking about that now, because I would like you to complete the practice exam before we do the exam review. I will see you all in 47 hours.